Good morning, traders and investors. Thank you for tuning in to Pre-Market Prep, one of the best places each morning to get your overnight news, to get breaking news, to get a whole lot of trading ideas, and maybe most importantly, some really good education. And you know what? We have fun here, especially on a Friday option expiration. And guess what? The last trading day of the Biden administration. Kind of crazy. There is a holiday on Monday of next week, MLK Day in the U.S. The U.S. stock market will be closed on Monday, so no school on Monday. And then officially, the Trump administration starts on Tuesday. We're going to have a quick look at the markets in just a second here and a couple other highlights. But first, ladies and gentlemen, let's run that intro.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, folks, real quick look at the markets. S&P 500 futures bumping up against the 6,000 level. Last check up about 0.3%. The NASDAQ, we know a tech-heavy index, up 0.4. Russell small cap index up about 0.5%. Crude oil was trading slightly lower between that 78.50 and 78.75 per barrel level. Gold down a few bucks around the 2,740 per ounce level. And Bitcoin up about 2.5%, back over the $100,000 level at 8:35 a.m. today. We are going to have on a great guest, CC Lagator, founder of Options AI. What a great time to have somebody like that on today's options expiration. Earnings season coming down the pipeline here, ladies and gentlemen. We can get into a little bit of a preview if you like that a little bit later. Just want to give a quick reminder to support the channel via a like, hit that thumbs up, also hit the subscribe button if you don't mind, folks. Let's bring in the other guys here, Christian and Dennis, adding you guys right now. Good morning, fellas.
What's going on? Talk
Morning.
to me.
Happy
What's
Friday.
up?
Not much. Talk to me. Give me stuff. It is a little quiet out there today, right?
It's not. So again, it's pockets where we see action continuous, and that's in tech, and there's a lot of action here in tech. And then there's pockets where, we've been going sideways here for a bit too. And, maybe the calm before the option storm here this morning, because we always get some movement on options expiration. Great guest with CC Lagator going to be coming on at 8:35. He always breaks it all down for us here. Christian, what are you seeing out there?
Well, good morning and happy Friday. It's the first full week, so I don't have to try to figure out what day it is. We don't have a holiday in the middle of the week, so it's a little bit it's the first full week that we've had. I think I don't know, it feels like 3 or 4 weeks or something like that.
Good point.
Very interesting day in the market yesterday. A lot of rotation. That was my theme of the day yesterday was rotation. There's rotation all over the place.
Yeah.
And if you look, it feels like bonds have really kind of shifted a bit. I see bond futures up again this morning. 30-year bond futures up 0.4 percentage point, and I think that's kind of spurring the rotation around. What do you think?
Yeah, I think so. TLT with a nice bounce here, and you start asking questions. Is the low in for the TLT? I mean, we went straight down from 95 to 85, and obviously, we rally on the CPI number. Held up nicely. I mean, that is good news for the broad market. The small caps need that. They are obviously connected to the TLT at the hip. Interest rate sensitive names need that. Tech, not so much, but it doesn't hurt tech either.
Did you see yesterday this? People always quote these stats, and I don't have the stats for it. But if you look at the what the RSP did, which was the equally weighted S&P yesterday, it was up 0.8 percentage point. And I think for this week, we've got one more day. Let me just bring up the 10th here, 2025. The RSP is up 3.4% this week. So equally weighted stocks. That means if the equally weighted S&P is going up like that, that means that there is a big increase in market breadth. So you couple the up 0.8 percentage point yesterday with RSP, and meanwhile the Qs were down about the same. They were down 0.7 percentage point. So there was a lot going on. I don't know if that is that a great market for you to trade, Dennis? Do you like when there's separation like that?
I like when I see So I do to a certain extent. I like the rotation, especially, when I was kind of calling it. So I've kind of, been feeling the value names, and that's what you're seeing really when you're seeing RSP outperformance. It's a little bit, from the leaders to laggards, laggards to leaders, because we know the RSP very much underperformed in December and very much underperformed last year. So, I mean, a little bit of rally. I think you're seeing those value names, think about the banks, think about the energy stocks. Think about the stocks that have really, held on, and actually been your leaders this year. It's been quite different. And I mean, RSP being up on the year where the S&P is basically flat. And we might even be down actually on the S&P slightly on the year. I don't know after today. It's close. But I think still just sloppy sideways action. But, for the RSP to really sustain the rally, we need the TLT to not roll over again. So if you're trading the equal weight, keep an eye on the TLT. It's your indicator. If you're trading tech, you don't care as much about the TLT. If you are trading any of these value names, keep an eye on the TLT. It matters.
Christian, are you using that RSP kind of like in tandem with that other data point that you highlighted earlier this week, the S&P breadth, the 4-week? Are you like using those together? Can you only use one at a time?
No, I like to use them in combination because I like to see basically for confirmation purposes. Like if I see something move and I'm just watching the price of an index or so forth, what I like to do is then say, okay, what's going on under the hood? Are we seeing like a lot of stock setups in that group? So it could be a sector, or it could be the RSP in general. But I like to see like, okay, it's going up, just as we've seen in energy rally, for example, this year. Energy, I think, is still the number one sector so far year to date. But one of the things that I noticed like a few days ago was, we've got Schlumberger earnings this morning, but it wasn't all energy stocks. Like I think, like for example, like Exxon and Chevron, which are the biggest weights in XLE, are lagging. But you have a lot of like the midstream companies, and I'm more of a generalist. So I'm not an expert in energy stocks, but I just noticed, I was like, wow, there's a lot of these things that are breaking out. I mentioned one name that I never even traded before, which is EXE. Bring this, I guess I could bring
Yeah,
this,
go ahead.
Yeah,
this
please.
chart up a little bit. But, so absolutely do I think it's important to kind of find trade opportunities. Go. Here's EXE, which is breaking out. And, we covered this a couple days ago about that there's a lot of names, but you see the difference between like one of these stocks and another one was AR and EQT, just to kind of give you a flavor of like what's been going on with this group. And then meanwhile, like if you look at Exxon, like, okay, Exxon's off the lows, but it's not the same thing that's happening. So it's a long-winded response or answer to your question, but certainly you want to pay attention to things like that. And also when you look at the 4-week new highs, right, it's gonna hit you in the face in terms of like what areas are outperforming versus the rest. So when you see like, for instance, yesterday's 4-week new high list in the S&P, I saw a lot of industrials and I saw a lot of financials. And financials, we kind of know, we've talked about, that of course, that's based a lot of earnings reports. JP Morgan's on the highs, Citigroup, which we talked about in, yesterday's show, tacked on a little bit of gains. But so that's not a surprise. But, when I see other groups, it makes me really curious. And when I'm curious, I begin to kind of dig in and look for trade setups.
If you guys want to kind of shift into news mode a little bit here, we can go over an earnings report that we were kicking around a little bit before we came on air.
Sure.
JB Hunt, that's JBHT. They missed on their earnings. Their sales were in line. Shares were down in pre-market last time I looked. I haven't looked in a minute. Shares were down like 9%. And obviously implications for other transportation names here, as I think this was like the first trucker to report here in this earnings season.
Yeah. You've got KNX trading down, XPO trading down, and Sympathy with this as well. JB Hunt is one of those value names, and it's had a value rally so far in 2025, having a pretty good start from 170 to 186, but then boom, one foul swoop, giving it all back here. I don't know what to say. I mean, you got some support down here in the 170 area. Are they going to go value hunting and buy this dip? It's potentially there, but I don't think the setup's clean enough for me to just get all down and dirty and say, yeah, I'm just buying this random dip. But
All
then you
right.
got KNX also trading down. Just sympathy we can quickly do because the other trucker stocks, KNX, same thing, value trade,
Night.
moving up, going to pull back with it. And then XPO as well, same thing. You know, it's value name more, although it hasn't had the rally that the other ones did. It's pulling back slightly here this morning too. I don't know implications here. I mean, you can read in more of trucking stocks not doing as well, but the numbers weren't that bad. It wasn't like, you know, they came around, they lowered, you know, the guidance or anything like that. It wasn't really that bad. So I'm not overly concerned that there's implications for the broad economy when you see a trucking stock, you know, disappoint the street.
Yeah. And definitely just getting a little ahead of myself here, but in a couple weeks, not next week, but the week after, we'll be starting to get names in like UPS, where we will be getting more information on not just trucking, but all kinds of transportation. Next week on Tuesday, we're going to have United Air. On Thursday next week, American Air. So some of the airlines are also coming down the pipeline here in our Q4 earnings season.
Keep an eye, just, you know, if you're wondering why we just had this pop here, this is options expiration. And we at 8 o'clock, we got the opening imbalances there. They opened and there wasn't that much, but just about 3-4 minutes ago, a whole bunch of buys came in. So I think it's not coincidence here that the S&P's just popped up 4 or 5 points here. Because we had a pile of buy imbalances come in. Now, again, that can change. This information's constantly moving. These are orders that are geared for the open. So when I'm saying buy imbalance, it's orders that are active at 9:30. But we can see, you know, the total sum of those orders in the imbalance data that comes from the NYSE. NASDAQ imbalances don't show up till 9:25, but they often follow the NYSE stocks. But I'm seeing a lot of buy imbalances across the board right now, and that's why the S&P just had a pop.
So like what kind of, you know, tips are you keeping in mind for your guys' self on a day like today, options expiration? I don't know if there's, you know, if it's like especially a strategy that you're always focused on when it's option expiration. If either of you guys have an idea there, you know, have at it.
I mean, I always, you know, am providing liquidity. And what does that mean? I'm out there. I have my orders out there at the open because often on an options expiration day, you can get a stock opening too high or too low. What that means is maybe you're long a stock and you're thinking about selling it. And you're like, well, I don't know. Well, have your order out there because you never know where these stocks go. Usually is increased volatility at the open and at the close. And, you know, also there's just maybe some institution just wants to buy it and maybe they push the price a little bit too high and get you out at a really good price. So I don't think, you know, it's a bad idea to, if you're thinking about exiting, not saying you know you're going to come in and exit because we're on options expiration, but if you were thinking about, hey, you know, I was thinking about taking the profits in there, I'd get the order out there before the open because sometimes, you know, you can get some really good prices. Sometimes not. Maybe the worst case, you just don't get executed. But in some cases, I've seen stocks open like 1-2% higher than they should just because of a big buy imbalance. So you think you're making 5%, then bang, you make 7%. Like, ooh, that was an awesome fill. I mean, I get awesome fills on this day. You know, like, so that's one consideration. Third Friday of the month, I have my orders out there and I'm not exiting, I'm entering position. So if the pre-market stock's trading here and all of a sudden, you know, we start blasting off because there's some buy imbalances there and the stock opens here, I will short that. If it's trading here in the pre-market and all of a sudden the stock starts selling off because of, you know, a big sell imbalance, I will buy that down there. It's basically surrounding where kind of the pre-market has it and where fair value has it. That's how I approach it.
I'm just going to jump in here because Intel, I've got Intel up on the screen. There's a headline out about Intel Panther Lake chip. It's sorry to interrupt you. First on its 18A node is set to launch the second half of the year, further boosting its AI PC portfolio. Panther Lake is expected to produce 70% in-house, lowering costs and helpful profitability. That's from Beth Kindig, I see on Twitter. I don't even see anything on Bloomberg for that, but there you go. You got a nice boost, and already a few names that are moving with the group. With I think Applied Materials and Lam Research also got upgraded this morning. So you got a little movement there in the chip space this morning.
And just a shout out to the chat here. The chat was all over that. I don't know if you guys noticed, but in the YouTube chat, they were like, Intel's moving. If you're not in that chat, folks, I mean, there's a lot of good information. You have to sift through some stuff, but I mean, there's a lot of really good information that's happening in that chat. If you're not in that chat, pop in and say hello and see what kind of information the rest of the community can give you.
So jumping into the Intel technicals here, because Joel's not here, and this is where he usually jumps into the technicals. I'll just say the high back for the year is $20.98. I'm not sure where we just popped to, but I feel like it was around there. Christian, where did we just get to on the pre-market?
So right around, so you could see on the screen, like I've got resistance right around 2107. Notice the pop. So 2 levels of resistance, 2050 and 2107. 2050 is kind of right where we're kind of coming back into, but the initial pop got us right to my resistance level, which was 2107. Volume at price coming into play again, but look at it; it doesn't want to break out. This little yellow box here is this week's value area. The gray box is the value area for the month, which again can kind of cap things because it's where the majority of all the volume and price happened for the previous month.
So keep in mind the way I trade, the majority of my day trading, my everyday, money, this is how I make my living, is by looking at the news, understanding, okay, this is bullish, and kind of getting a feel for what the news is worth, and then going to the technicals and looking at old highs and old lows. That's Joel Elconin technical analysis. And when you look at Intel, it just stood out like a sore thumb. The 2025 high, 2098. It goes up literally to what you said, 2107. So we're right there, 2099. Somebody else was saying, $21. It went right there and failed right at the level you think it would. So, if you're in these things and you're like, oh, this is good news, go to the daily, have your 90-day up, pick a point, look where, you've got some old highs, and that's probably where it stalls out. It coincides with the December 16th high, 2110 too. So that's basically, your last 2 months of highs. There's a double top right in that whole 21 area. So it's not surprising that on that news, that stock would stall out. It all depends on what the news is too. So you kind of know what the news is worth, which is maybe a good segue into Applied Materials LRCX because, what's it worth? So, I've specialized. It's basically just, information, it's information arbitrage is really what it is. Understanding that new information has just been disseminated to the market. What is that typically worth from a quantitative perspective? Knowing, usually an upgrade, maybe a pop at 2.5%. Stock's up 5%. I was like, well, it's overdone. Stock's up 1%. It's probably not up enough. So, in case in point, Applied Materials upgraded last night. I was able to actually buy Applied Materials last night and, make a little bit of money on it because it wasn't up enough. Now it's up more and I've already sold it. But just understanding what news is worth is a big part of, my core strategies. And it's something that just people don't understand and just don't know. So that's what we try to help people with.
Well, it's kind of interesting too, because when's the last time like we've talked or anybody has really talked about Applied Materials? It's kind of been just left. I don't want to be that dramatic and say left for dead, but I don't think nobody's really been poking around there and saying, oh, what's Applied Materials doing for the day? And similarly with Lam Research. And then by the way, we've got to stick with the chip space. Then you have some news about, I believe it's Starboard has taken a stake in
Qorvo.
And
Qorvo, QRVO,
which is another one that you don't hear anybody talk about anymore, and specifically probably because it really fell pretty hard on earnings.
And Starboard likes these names. They come into names that have been beaten up. They feel like they're overdone, and they know, when they disclose that position, the stock's going to get a pop on it too. So it's funny, like when these activists come into these positions, it's almost like they're up 3 to 5% immediately because they take the position, they get, big into it, and then they disclose, and they know on their disclosure it's going to pop 3 to 5%. It's the same with Burke. Warren's got a huge edge because when he buys a stock, he's basically up 3 to 4% on it immediately because when it gets disclosed to the market, the stock's going to pop. And this is new positions, not existing positions. So saying if Warren says, okay, we're going to buy this stock, and it's a new position, when that gets disseminated to the overall market, whether, through its filing or whether, he says something, at a shareholder meeting or, to somebody in the media, it's going to pop up. Qorvo, same thing here with Starboard. Starboard knows, that when they disclose it, it's going to pop. And when the stock's beaten up like this, you can really catch a lot of people maybe off guard as well. So, where you've got some people that are like, wow, this isn't a real downtrend, the momentum. So they're trying to turn the momentum too. Get into the gap area, it starts to get interesting. But Starboard also puts a floor on stocks too, it seems like when they get in here, there's a certain spot where people are like, okay, well, Starboard's in from 70 to 72. I'm comfortable buying where they bought. So it kind of almost puts like that floor on the stock as well. Elliott's maybe a bigger one where when Elliott comes in, it seems like the stocks really hold up well even in market sell-offs.
Right. I was just going to bring up one other one that nobody saw. Since we're talking, otherwise I wouldn't talk about this. But since we're talking about the semi space, I did see something interesting in the option market yesterday. AMBA, this is Ambarella, and another one that you don't see people talk too much about. There is a March 85 calls that went up yesterday. Pretty size player in the option market for about $360,000 in premium. So this is another name that's kind of sneaky. They had good earnings. You could see it kind of topped out here on earnings, and it's just been kind of hanging around, consolidating a little bit. I'm kind of a bit interested in this name. I've tried to trade this name a couple times. It hasn't really worked out for me, and I kind of abandon it. Like if I don't get good results right away, like on a swing trade, sometimes I get a bit bored and I say, okay, I'll move on to something that's moving a bit more decently or moving a bit faster. So, any thoughts on that? Do you have any thoughts on this one?
Well, I want to just add to the point you're just making, which is a fantastic point. I mean, when you're a momentum trader, you want immediate gratification, because if it starts going away from you, that's like saying the momentum is slowing, and it's saying that your thesis is wrong. So I like what you said there. It's not necessarily that you get bored with it. It's probably more the case that the momentum's starting to slow and you're like, well, maybe my thesis is wrong here. So I absolutely think when you're a momentum trader, and everybody wants to be, it seems like lately, a momentum traders, because we've been in such a momentum market, that you need immediate gratification. You need to see your trade working right away. I mean, in the AMBA setup here, I can see what you're looking at. Stock is strong. It held up well in the recent market sell-off. It's reapproaching highs here. So, just putting that whole picture together, the stock looks like it wants to break out. I mean, if all of a sudden the stock starts going down 75, 74, then you start to think, well, okay, the momentum's slowing and maybe my thesis has holes in it, and that's where you cut out. That's the nice thing about being a momentum trader, is you kind of, know like when it starts to turn, you're going to be selling, sooner than the next guy, so you don't get caught holding the bags. When you're a contrarian trader, a contrarian investor, well, you're buying stocks that are in downtrends or stocks that are weaker relative to the market. And in that case, it's weaker again here today, but maybe there's going to be a story that turns. Intel, for instance, is a contrarian trade where, the stock has been going down, down, down. If you're buying that, you obviously, are betting, on a turnaround story here. Well, turnaround stories aren't built in a day. So you got to be more patient with those trades sometimes. And sometimes patience kills you. Yeah. So, I mean, I kind of like, again, it's a market environment that we're in, but I like your AMBA setup.
Yeah,
you do need go ahead, Brent.
I was just going to say you absolutely do need patience. Like if you're looking at kind of trying to be like a Starboard or an Elliott, you've got to have a lot of patience with it. Go ahead. I'm sorry about that.
Oh, you're fine. No, it was a good little button end to the point there. Just wanted to give a real quick preview, a real quick heads up. At 8:30 a.m., we are going to be getting a little data on home builders, housing starts, and building permits. Not sure, if the home builders have been something that you guys have been looking at. If not, Dennis, what other ratings were you looking at today that caught your attention?
Well, I mean, you might as well, if you're going to go with the home builders, you might as well look at Fastenal today here too, the nuts and bolts of the home builder industry and the nuts and bolts of the regular economy, because that's what they physically sell, nuts and bolts, fastening everything. Fastenal earnings came out here. It's again, I'll give you the numbers. It did miss by 2 cents. I don't think it's a disaster though. I don't think it's like, whoa, red flag, something's up, how's Fastenal missing? It's a slight miss on EPS, a slight miss on revenue. I don't think they've given guidance here yet. They maybe haven't had the call yet. I'm not listening to the Fastenal call. If it's going on right now, it might be going on. It's down a little bit here, but this is a stock that actually, I've wanted in my long-term portfolio for a long time. And it's one that I never strike with. This little pullback here is interesting. I think, $70 to 71 on Fastenal has got some decent support right here, and it's kind of right there right now. So I actually don't mind this Fastenal. Again, if you're trading this, and then it starts taking out the 70, then you think, okay, well, your next support may be down there at 65 or 66. They don't want to stick with it. So I think if it takes out this 70 area, then I'd maybe bail, but it could have a potential for a bounce. And the home builders obviously have been beaten up with interest rates, but if TLT starts to stabilize and starts to go higher, that's good news for the home builders.
Yeah, that's what I've been looking at too, is this move in rates. I mean, a move like this in interest rates is very good. Keep in mind, like when you hear about like mortgage rates, which was in the chat earlier about like where mortgages are, you're not going to get like all this move that you're seeing in TLT this week. You're not going to get where interest rate, that report about mortgage rates won't come out till like the middle of next week. It's really kind of like lagging a little bit in terms of, they'll tell you right now, like mortgage rates are over 7%, but that doesn't cover any of this, any of this move that we've seen this week. So next week, you'll hear about mortgage rates dropping because it's just, they're like, probably about 3 or 4 days behind with reporting that. But I'm starting to kind of kick the tires a little bit on looking at something. I haven't really found any trade yet that I really like. I'm kind of more with the some of the names that kind of go in and build a little bit, or like, something like Sherman-Williams, which I think got a price target raise this morning.
Yeah,
Something like that where, go ahead.
You want to watch the paint dry? I was just making a joke with you.
Yeah, well, there you go. Builder is another one that I tend to watch. So again, it hasn't really enticed me because these names, once they come off the lows, then I just kind of feel like now the heavy lifting has to come in after they've already initially bounced. But I'm definitely kind of looking at this a little bit in terms of, there is going to need to be rebuilding that's going to happen in California, and you've got the move in interest rates.
Yeah.
So I like when you've got a couple things, that are at play for a reason to get into a trade.
I could get talked into the home builders. I mean, the value trade has been there for a long time. Momentum has been just a killer. I mean, it was awful December, but again, we're in a new calendar, and we've been talking about, this shift, and the breadth that Christian was talking about with the RSP and the TLT rallying the last few days. That's all good news for the home builders. I would just have the TLT though, keep in mind, if that starts to break down again, that's your exit strategy. So TLT rallying here today, probably good news for the home builders as well today. Even though Fastenal concerns me somewhat, but I think I think the Fastenal dip might get bought.
We got about 10 minutes here, guys, before we're going to welcome on our guest for today, CC Lagator, founder of Options AI. We'll certainly be talking more about the options expiration happening today. But what else we got kicking around news-wise? Any other ratings that you were especially attracted to, Christian?
Well, CRM getting upgraded to TD Cowen. It's a big name, widely followed by retail community. Been coming off really, we've talked about tech holding up well in December. CRM did not. CRM was selling off the majority of December here, where obviously you had the Qs, kind of trying to hold up not bad. And, CRM was down from 360 to 320. Still sitting down here near the lows for the year, but all of a sudden, you get an upgrade from TD Cowen here. You get a stock up $7. Makes the technical start to look a little bit better. Is this one you'd be interested in looking at, Christian?
It's really, I've been looking at this name, and it's really gotten beaten up since, here was the earnings gap. It went up from 331, popped all the way up to 365. You started to kind of hang in there, and it's really kind of broken down overall with the whole software space. Take a look at how similar CRM is to the IGV ETF, which is pretty beaten up. So I do like the downgrade. The upgrade, and where a name has been beaten up rather than them upgrade. I feel like sometimes the brokers upgrade things just because they're moving, and all of a sudden they're popular, so they want to get in that game. But I do like the Salesforce upgrade with the stock coming in here, so that makes sense to me. There was a couple other tech names too that I believe were upgraded. Do you have that, Brent?
Yeah, we had Applied Materials LRCX, which we already talked about. Cloudflare is a big one that I had written on my screen as well here. Cloudflare was upgraded, I believe, by Citi.
Yep.
I think it was Citi. Cloudflare is interesting because this is a stock that's making a new 52-week high here, approaching it. Not quite there, I guess. 119.42 is the 52-week high. We're butting up there right now. So it's stalling where you would think it would stall. Hard to, say, okay, I'm going to go buy this thing right at major resistance. It gets above 120, starts to get interesting, though. But Cloudflare has been a stock that has underperformed a lot of the other cybersecurity stocks here. Been coming back here, though, slow and steady wins the race. Slow, steady climb here over the course of the last year. Starting to show some life. Still way off its 2021 highs, which was up over $200 at 221.
And then the other one with Salesforce. This is TD Cowen, by the way, who did these upgrades is with SAP. You want to look at a sleeper stock that again, nobody really talks about SAP, but sometimes the names that nobody talks about are the ones that just do this. It's amazing that they're upgrading the stock up here, but I think for me personally, I would be waiting for a nice dip in this name. But again, this is one of the names that had, if you go back a couple months months ago, had earnings. It's going to have earnings again, that's why I wouldn't want to really get in front of the earnings with this one, because it's up a little bit too much. But maybe on a strong earnings report and it dips, that's where I would be looking to kind of get involved with this one. But interesting upgrade. Also, what a nice, what a beast of a name.
Yeah, oh, for sure. And again, like you said, not too many people talk about this, but it's just kind of been slow and steady wins the race. Started 2024 down at 140, ended the year up around 240. So, nobody gave it any love. It was up 100 points last year, stock up 75% and continues. It's a perfect, take your Jeff Mackey purple crayon. Hey, Jeff, take your Jeff Mackey purple crayon and, just draw that on that long-term line. And it's a perfect, it is just holding that purple crayon line just perfectly here. Sometimes Joel can find the purple crayon for me, but we got to get Jeff on the show sometime. We got to reach out to Jeff. Yeah, I don't know if he's ever been on our show. We know Jeff. I've got to bring him on because Jeff Mackey is just an awesome commentator. He was one of the original Fast Money people. There was the original four, and then he left the show a couple years in, but he is just excellent with his stock commentary, and he's funny as hell. I love Jeff.
Just want to break in here with that building permits, housing starts data, a little better than expected. Housing starts month over month for December, up almost 16%. Building permits were up, down about 1%, just a little under 1%. I saw a bit of an industry call from B of A. Not sure if this one caught your guys' attention. It was in the airline space. They upgraded AAL and downgraded Southwest, that's ticker LUV, and JetBlue. And ahead of the airlines earnings season here coming down in the pipe in the next week or two or so. Did this one do anything for you guys?
I mean, LUV is just hated. Absolutely, the stock that it went from always called the best of breed 10 years ago to the absolute, I guess not the worst of breed because its Spirit actually go under. But of the big major ones here, they've just lost their way. I mean, it's the Intel of the airline industry here, and they need to find their way. They've done everything wrong. Again, every time the stock starts to try to rally a little bit, you got analysts, obviously moving to the sidelines here because they've been wrong to be bullish this name the whole time. But I mean, B of A downgrading the stock to sell, underperform is sell. JetBlue has always been an underperformer here as well. It's had a recent move here. I don't know. It's hard to buy these laggards like Christian. Like what? I mean, this is just, it's tough when the momentum's broken and there's so much overhead supply. And you've seen such a rally in UAL and DAL and even American Airlines. And then you have Love that's just sitting there doing nothing. What's the catalyst to kickstart it? Like, I don't know. It needs an activist or something. That's what it really needs. I think there is an activist in there, isn't there? I feel like there's an activist already in here too.
There's one for Love. We've heard that before. We've heard for Southwest. I believe that there's an activist in there, and then continues to underperform. So, these have been tough.
Yeah, Elliot's in there.
Elliot,
I mean, it's not even helping them. Like, this is how bad the stock is.
That's not a good sign.
Elliot in there, it doesn't even help.
AAL, by the way, remember a couple weeks. So there's a couple things that have happened with American Airlines. Number one, you had this big gap up because they announced preliminary numbers and they were really strong. Then a couple weeks later, this was right around, I think it was one of the busiest holiday travel days. Their systems went down. So thank goodness I wasn't in the stock that day. Thank goodness I wasn't traveling that day, but it's been pretty resilient and it's going to come back. So it scares me. I thought about buying the dip that day that usually it's a little bit of an overreaction, or if it's been a strong stock, it's something good to get it. I just couldn't pull the trigger on going long on that. Here was the dip, it got bought, and now you got an upgrade in the stock. Keep in mind, I think you're going to get United, which has been the one of the strongest out of the group. They're going to report next week.
Okay.
All right, let's bring on
Tuesday. Tuesday Netflix is going to report here too. So, just giving you the earnings because obviously we're not open on Monday. So these are earnings that are going to hit you right away on the first day. We're open next week, first day after the inauguration too. Netflix, UAL, Schwab, IBKR, STX, 3M, DHI. Those are all on the docket for Tuesday. So there's some big names. Netflix, obviously, Tuesday night.
Earnest season really, the earnings season really kind of getting going in earnest next week, and especially the week after. There's a ton of earnings coming down the pipeline in 2 weeks. I see our guest for today in the background. Let's bring him on. I'm going to run the banner, the intro here. I haven't done that. Why don't we run this little intro here?
Yeah, let's do it.
CC Lagator, founder of Options AI. How are you doing this morning, sir?
Good. Great to see you guys.
How's your year
CC.
been? How's your year been
Yep.
so far?
It's been good. And are you guys ready for a 3-day weekend?
Woo!
Yes.
This is all we get. There's
Well,
only
funny, it was
4
like-
days a week now, forever. We're only
I
trading
think
it seems like 4 days a week. Our markets are going 24 hours a day, but they're going down to 4 days a week, I heard.
Exactly.
Forever.
It's not the
Yeah.
worst thing in the world. No, it's funny. I just did like a huge thing of content yesterday that I sent out to like 10,000 people. And then afterwards, I'm like, I totally forgot that there's no trading on Monday. I kept referring to Monday when I should have been doing Tuesday.
Traders always do that for MLK. Poor MLK day. Always forgotten by traders.
Well, it seems like what was amazing about those 2 holiday weeks was if you ever wanted to completely destroy 2 weeks of work, put the holiday right on Wednesday, right? And it was like nobody wanted to do anything like for 2 weeks. It was kind of like being in Europe in August, and
Really?
nobody's working for the whole month.
So-
Dennis, I have an answer to a question that you brought up earlier.
Yep.
When you were talking about like the buy imbalances and stuff on expiration.
Yep.
And I think, Brent, you were like kind of asking like what kind
Yeah.
of changes. So for the morning on expiration, what's happening when you're kind of seeing that stuff, and it's not, you might not necessarily see it wild. I think triple witching expirations are usually a little bit more wild on the open or anything. But in my old job as a market maker, and then a lot of people that are trading that sort of a lot of those kinds of positions at hedge funds and things like that. So let's say my old job, I'm delta neutral, or I want to stay long 10,000 deltas or something in some position based upon the risk profile. 2 weeks from expiration, if most of my stuff's expiring like in 2 or 3 weeks, I wake up in the morning and that 10,000 deltas is I need to buy 500 shares of the stock to stay at 10,000. What happens on a morning like today is that might be a day where I need to buy 10,000 shares of stock to stay at that 10,000 delta level or delta neutral or whatever. So you'll see those kinds of buy imbalances on an expiration because basically the drift of that delta position, it accelerates into the expiration Friday morning, of course, but then especially towards the afternoon. And so then towards the end of the day, especially in single stock names, sometimes you see those kinds of crazy imbalances at the end, because in my old job, suddenly I'm like, I can't come in Tuesday morning short 50,000 deltas in this stock. I need to buy it right now so I can sleep this weekend, right?
Right.
And that's all based upon where that stock is trading, like next to a strike. You know what I mean?
So a lot of these buy imbalances and sell imbalances we see at the open and the close. This is hedging techniques then.
Totally. This is people just trying to get to where they thought their position was yesterday afternoon, right? So they come in this morning, they've got a position in NVIDIA, it's up a couple bucks, or they got a position in SPY and it's up, a half a point or whatever it's up right now. And they have to kind of adjust that all to get back to where they wanted to be Thursday afternoon.
So, ACC, great to have you on the show. Always love your content, and especially on options expiration day. So the more that futures rally, essentially the more that they're buying too, the more that they basically have to true up.
Exactly. They got to true up and they're chasing. And then obviously you've got these weird decisions to make, like, particularly if you're like the market maker side of things, right? Where you don't really care. Like, you don't care if NVIDIA goes up or down. You want to make, let's say if you're short premium, you just want it to not move. And you have all these weird decisions pre-market and post-market where you're like, I know it's illiquid. I'm probably the one moving it at this point. Yep. If I just back off and stop, does it come back to me? Yep. But then if I miss my chance and NVIDIA opens up $5, I just lost 150 grand. You know what I mean? So you have all those weird decisions, especially pre-market, to make.
this is really important too, because there's so many connotations that you have on social media about what market makers do. I used to do this too. You know, I was an ETF risk trader, so I used to make block trades for institutions. So I had to play this game too, pre-market. So I know exactly what you're talking about. But the point that I'm trying to make here is that the market makers, they're basically just trying to make sure that they're hedging themselves out for their risk. They're not doing anything here in particular that is what's the word? Like, I'm thinking of an evil word.
Nefarious?
Yeah, nefarious or
Totally.
predatory. They just want to make sure they've got to buy stock, not because they're pushing the market or trying to do something nefarious. They've got to make sure that they've got this delta risk and they're sitting with an option position that's hedged from the previous day, and now they've got to catch up. So all they're doing is making sure that they're minimizing their risk rather than doing something, as a great word, nefarious.
Yeah, and I always say this, like, not to be one to defend Citadel or whatever, but because they have so many built-in advantages, right? And my old job had so many built-in advantages when I'm trading with you, the public, right? The last thing I want to do is get involved in trying to like manipulate, right, like where a stock is going to finish or something. So I'm actually on that side of I'm literally so agnostic as to be like the most boring person. Like, it's almost like better if you don't know what the company even does, if you're on that side of the business, because you're like, I don't want my mind getting in the way of being completely agnostic about the math, right? And if you're in that role, you start to be worried more about the order flow coming to you being like, does this person know anything, right? Like, that's a big order, right?
Yeah,
sure. You know that I don't know. I haven't even been paying attention. So anyway, yeah. So you're not like, I see a lot of people talk about market makers manipulating stuff and all. There are some examples of that, I think, with like, you know, there's some weird, like the same way like equity traders mark a position for like a big long only fund at the end of a year and the end of a month. Like, they may be doing a little bit of that. But in general, they're just kind of trying to stay out of the way and be agnostic.
Well, they're under scrutiny too. I mean, at Bright Trading, all those years of prop, you know, you got virtual market makers, all these guys playing, and I mean, they're under scrutiny and they're looked at, you know, and you think like, you know, that, oh yeah, they're just getting away with murder over there. Those are like companies, you know, the market making companies that the regulators look at regularly, and they know that, hey, you know the rules, you know, you're informed here, so we're going to hold you to definitely a higher standard. Like in some cases, maybe, you know, get some retail trader and they just don't understand, you know, I didn't even know I was breaking a rule. So, you know, you might give them a little, you know, like a little easier on them if they're doing something nefarious that they didn't even know was nefarious. They know the market makers know all the rules. They know it all inside out. They know all the plumbing inside out. So, I mean, they're held to a higher scrutiny for sure, too. I mean, everybody thinks, you know, that, you know, it's all the market makers screwing me all the time. The market makers are just trying to make the market. The market makers are in the game for the spreads, you know, really, you know, is what they're
that's what I was about to say, Dennis, is they are screwing you, but it's very
on the spread is where they're screwing you.
It's on the spread, right? So they have two advantages. One is exactly what you just said, right? They've got the spread that they're constantly like, you have to be like an extra 5 to 10% right on every options trade than the market maker does, right? Because he's getting 5 cents of edge on every trade. And then the second way they screw you is they're the only ones in that game with unlimited pockets, right? So, you know, but that gets tested at market extremes, right? So, but like my old firm, if the VIX was 50, right, it's the biggest chance you have all year to make money, right? Because you're just selling everything to everyone, right? And as long as the VIX doesn't go to 90, right, and then, you know, you have that. We used to joke at my firm, this is going totally off track, but I think it's kind of funny stuff.
That's an interesting conversation, though.
Yeah, so like we used to have, at moments of extreme risk, my company was based in San Francisco. I was in New York. We had offices all, you know, Chicago, Philadelphia, and they would have a risk call, like the founders of my firm out in San Francisco, and we'd all be on the phone, and they would basically be saying, everybody needs to go in this morning and take off risk, right? The firm is essentially everybody in the firm has the same exact position, and the VIX is 40. And if the market craps out today, we're basically out of business, right? And so what would happen is it was always the bottom. Like literally, like I never once was one of these big massive risk calls where they were telling us to take off risk, not the bottom of the market. And what would happen is once you started to realize that, if you were an older trader, you knew the younger traders would actually take off risk. The older traders would go, I'm adding a little risk this morning, right?
Yeah.
They would basically, the younger guys that hadn't been around, that hadn't seen the same game 5 times, were basically taking off the risk for the firm, and the older guys were making extra money that morning. So,
these are great stories. I love the
it.
trading stories. Between all of us here, like we've got really good backgrounds in terms of some institutional trading and so forth. I'm just going to segue into, so being that today is options expiration, what did you think in terms of this week, and also like how does this set up now that we've got we're going to jump to February expiration?
Yeah, so this was a pretty classic.
You got the same cough I do. Never goes away.
No, and my kid was home from yesterday. Crossed fingers I didn't get it. So basically, this was kind of a classic market. We've basically been in market chop for the last month, going on a month and a half or whatever, right? Kind of going sideways, but sort of violent chop, right?
Yeah.
And I think when the last time I was in on the show, it was December expiration. If you look at that December expiration, which I think was the 20th or something, that's right kind of when the violent chop started, right? It was the first bit of like kind of like intraday volatility. And for months leading up to that, options had been way overpricing market moves, right? Going back to the summer. And they were all worried about the election. The market was worried about the election. People were going out and buying protection. They were buying, out of the money calls as well. And it just didn't happen, right? We got the election rally, which was a couple of days. But other than that, it was like, a fairly boring intraday market every day. That changed in December after all of that December options expiration stuff expired. So, obviously when I come on the show, I'm talking about options as an option-centric view of the market. Obviously options don't, they're not in control of the market, but they are like kind of the tail, the wagging the dog on how often, oftentimes how the market behaves, right? And so it was very clear after that December expiry that it kind of opened things up for the market to be a little bit more, volatile from day to day. Now, at the same time, that there was like a very specific thing that was happening in options, and it was that the market before the election and before that last bit of rally, after a monster rally all year, right, in the SPX, everybody kind of had their eyes on that 6,000 level. And so what happens when you have a lot of those big round numbers in anything, right? It's happening right now in Bitcoin at 100,000.
Yeah.
Is everybody sort of targets that big round number to the upside, and they're buying equities, they're doing things, maybe they're buying some downside puts for protection, but they're really they're selling calls up either at that level exactly or just above it, being like, that's my target. Like, I think SPX could be 6,000 by the end of the year or whatever. And that kind of hung over the market for, it's now been I would say 2 months going on where people keep selling options up above that 6,000 level, right at the top of that chop range we've been in for the last month and a half. A lot of that expires today, right? So that's the one thing that I would say changes into next week, is that kind of that cap that we've had on the market that's made it really difficult for us to kind of take out that prior high. A lot of that disappears today. If the news continued, interest rates have been controlling this market, right? So, or treasury yields, I should say. So if the yields picture continues and we get through the next 2 weeks of earnings season and people are kind of happy with mega cap tech and things like that, that cap is gone, so that if we took a run back at those prior highs, it would be a little bit more buttery to get through than it has been. And that's what changes after this expiration versus the last couple, because even at the end of the year, people still had positions that they had on for 6 months that they had been selling calls up above that 6,000 level. And it kind of was keeping a cap on it. Most of that disappears today, unless, of course, it gets reestablished over the next couple of weeks. But that's the interesting thing. The downside and sort of that scare that we saw on Monday, right? The VIX, was like 22, that, or 21 and a half or something, I think it got to. That was there's not a lot of protection if the market sells off. So if like treasury yields or something turned back bearish next week or the week after, in the market sentiment wise, there's not a lot of support down below via the options market. You could get down to 5,700 before there was like a lot of real support within the options market. So that remains, and there's it's a little scary to the downside. Although I will say, when you're in a choppy market and you see the VIX 22-ish, 7 out of 10 times you're going to be right to buy that morning, right?
Gotcha.
And occasionally you're going to be wrong, and you might be really wrong. And those are the times when the VIX goes to 30 something, right? Where you have, instead of a 5% pullback in the market, you have, a 10% or 8% or something like that. But that was a sort of a classic chop. It got right to it was taking out some of that chop range lows on Monday or whatever that was. And that's when you saw that VIX, which had been creeping higher. That's when you saw it kind of spike up to 21 and a half. And that's right when, we sort of got that reversal. And then the CPI and all came out, and it sort of took us out of that fear zone, basically.
Gotcha. So I have a couple follow-up questions for you on this. By the way, so this is great information, because it's interesting to think about the dynamics. If there is some type of outside event or something to the downside, you want to know that could really kind of just decide what you're going to do in terms of buy the dip, or maybe you kind of have something to the downside just in case there's an outside move. So a couple quick questions for you, because I want to hear about too. I know January is a big expiration for single stocks. December is more for index. January, because of leaps, is because for single stock. But before, so I want to hear that. So, but the other thing I just wanted to ask you about is skew, which is measures tail risk rather than, the VIX right now is right around 16, but skew is still elevated. Is there a reason why you think skew, or is it, or do we just want to understand that out of the money options are just pricing more volatility?
Yeah, so skew got really high, basically into year end. And it was around the same time when the VIX was really low, 13 VIX. And the skew, just, sort of to catch up everybody that's watching, the skew measures the far out of the money, kind of extreme, not far, but the out of the money extremes within the SPX, right? The VIX measures mostly at the money and slightly out of the money, but near the money, I should say, the VIX is measuring. So when the VIX is 15, that's generally that there's 15 IV-ish, options near the money. The skew is basically saying, wait, but there's a bunch of people buying a ton of puts down 8% in the market or 10% in the market, for a 10% pullback. And that's what skew's measuring. So when the VIX was really low in early December, the skew was really high. And we saw that one market scare. I forget what date it was, but it was sort of December, the first or second week in December, remember? And I think the VIX spiked to 30. And that was
December 18th, I think it was.
Yeah. And so when people were like, oh my God, wait, where did that come from? Where was this Santa Claus rally? I thought there was zero risk for the next 2 weeks. Right? And that skew, when that happens, it suddenly reminded people oh, I should have been looking at that skew index. There is some fear in this market, even when the VIX is 14 or something. And that's what that was showing. So the skew has sort of been resolved with these last couple of VIX spikes, like the one earlier this week. And anytime you get that VIX spike, it's basically people saying, I'm willing to buy at the money options or near the money options. And it kind of resolves that skew a little bit, because those out of the money ones are no longer super expensive. But there is a persistent high skew. And I don't know if I have all the answers to it. It might be something to do with market dynamics and what has changed. And part of that is institutions are starting to do a lot of very predictable yet kind of strange options positions. And there's a lot of these ETFs and leveraged ETFs that sort of run out of the ability to do that all within the equity. And they're doing kind of strange options positions. So there may, like, put it this way, if you have a 3x leveraged NVIDIA ETF, which I don't even know, does that exist? Probably.
There's a 2 times. I don't know if there's a 2
Yeah,
times.
so
It
it
probably exists.
Somebody will launch it tomorrow, right?
Yeah. Great idea. Thanks. I'm a millionaire now.
So imagine, right. So imagine if you're running that 3 times NVIDIA ETF.
Yeah.
Like, there's no way you can do that in the equity itself, right? There's no way you can rebalance that every day. There's no way you can figure out that, well, if NVIDIA goes up 10% on earnings, I'll just buy 1 million shares of NVIDIA, right? So they're doing all that kind of stuff with derivatives and all to try to balance those out. That's a whole nother story of like the risk and all involved in those. But I think some of that, Christian, it's like sort of a long-winded way to get to, I think there's some weird stuff going on in that skew index. And
Okay, gotcha.
I think some of it's like that. Yeah.
So just real quick, and sorry for the to give you these complicated questions. Just real quick, because we're running out of time on the show. But anything preview for earnings or something that you think is like something that you've got to watch for next week or earnings season?
Well, you brought it up, and this is a good chance to answer your like part B of your question earlier, which is that this is a massive leaps expiration, right? And just to sort of catch everybody up on what leaps are, is those are the long-term options positions, right? If you're looking at an options in NVIDIA right now and you go out past next, like next year, you're seeing January, right? Like out like 2 to 3 years. Those options positions, a lot of people take those on, a year and a half ago. Those expired today, right? On the close. So that could introduce some single stock volatility, right? There was an options position in these single stocks that had existed and been piling up for months and, even over a year, that now expires today. And that takes us right into earnings season. So you take something like a Netflix that reports, I think, Tuesday or whatever. That's the kind of the big sexy name next week. Mm-hmm. And then Brent, you brought up the week after is ridiculous, right?
Yeah.
You've got all of the Amazons and Alphabets and Metas. Yeah. And so that single stock volatility of those leaps expiring, we're going right into that. And so what I always watch for is, we've talked about like expected moves a million times when I'm on the show, is I like to kind of look at those expected moves and look to see if there is, like what percentage of those, and you don't have to like do the math, but like the bank's earnings the other day, they all outperformed their expected move, I think, except JP Morgan. Like that was like the only one that was like inside its expected move. But most of those stocks were only pricing 3.5% moves. And a lot of those stocks were up like 5%, 6% that day, right? Intraday at least. So that tells me something. Like that tells me that like people are a little bit off sides in a market, right? I think Netflix is 8%, I want to say, next week. If Netflix moves 15% on that earnings, you're like, something's up, right? And I got to be on my toes here through these earnings season as these single stock names report. In general, the way to think about it is about 70% of the time, give or take 10%, a stock will move at or less than what options we're pricing on earnings, right? It is more likely that they don't move beyond that. But when they do move beyond that, sometimes it's violent, right? And that's something to keep an eye on over the next week, because it could be some underlying indication that people are either offsides to the upside, right? If you saw Netflix go up some crazy, I don't want to like, I'm not bullish on Netflix or anything, but if you saw that kind of action, it might mean people are a little offsides and trying to play catch up on some of these names, right? And they're afraid of missing their opportunity. And then the same thing always exists to the downside. If you see things crap out, people are like, that's a warning sign. If it's an 8% expected move and the thing's down 15%, take note of that, because if you see a couple in a row, it shows some underlying like uncertainty and people might be a little offsides.
A lot of great stuff here today, CC. Really appreciate you coming on, CC Lagator. He is founder at Options AI. The chat was loving you. We were putting up a couple of the comments there about how the chat was just loving you. Good educator, great weekly or monthly guest. So I'm sure we'll be seeing you again next month, CC.
Nice. Great to see you guys. Thanks for having me.
Thanks so
Have
much,
a
CC.
good day.
That's great information. Thank you.
Yeah.
Great stuff. Let me remove here CC, and the chat was loving Intel while we were interviewing CC.
Pop here. Probably CNBC breaking the news after is probably. I didn't know why. I'm just joking.
Ooh,
but
that's a shot, Dennis.
Sometimes you do see that. I know it's a shot. Sometimes you see that
like
initial pop on the news, and then 10 minutes later, it's like, why is it popping? Oh, CNBC is mentioning it now. First on news, but they're always last on news. But yeah, so Intel up to that resistance point that we've been talking about here. You're right in there right now, 21. So this is where you want to see it get through if you're bullish at. I still have Intel in the long-term portfolio, just a small piece. I sold 2/3 of the position just because it's been such a dog. But I kept a third just because it's like, you take a shot on, a small position here. But it's been just awful. Intel's just been awful for everyone.
That's what always makes me hesitant too. Do we want to do a quick? I know we're right at the cutoff for the show, but it's Friday. Do we want to do a couple tickers? I saw one. I saw somebody highlight ONON. This is a stock that I'm watching. Specifically because, whoa, look at the chart. That's bad. But look at how it's all kind of bundled up here. And the price action is getting really tight. So I'm watching for a break in this stock. So whoever mentioned, I apologize because the comments are rolling, but this is a great little mention here because it's just hanging out here. I'm looking for a break in ONON.
I like the upside here too, because often what you see is a move and then a consolidation of the move, which we've had for the last 6 weeks. Story still intact. We know they're eating Nike market share. It's like Nike's loss is Onon's gain. It's starting to perk up. It's looking pretty good here this morning. I kind of like it here too for a breakout trade. So again, when they're bunching up like this, you got to have your contingency plan. If it was to break down through 53, 54, I'd probably say, okay, well, maybe I'm wrong on this. But it looks like it wants to go. So I kind of like it.
Kind of kicking around here for a couple more tickers. If we get a couple more tickers in here, that'd be great. If not, in the meantime, just did want to give a quick little highlight of something that we've been working on over the last couple weeks. A newsletter, a recap newsletter after each show. I'm working on a little recap that we'll send out via an email. I'll put the link in the chat. And if you want to get a quick little recap each morning right before market open, you can sign up at this link that I'm going to share here in the chat in just a second.
Snow, I was just going to bring up I'll go quickly through a couple of these, but I think Snowflake also got an upgrade this morning. Is that right?
A buy rating from Cantor Fitzgerald.
Okay.
Yeah, Cantor gave it a buy rating. I didn't see the upgrade if there was an upgrade, but I saw the initiated with a buy at Cantor. Yeah,
that's what it was. Thank you. Sorry.
Straight up 2.6%. It's a big move.
Yeah, still this stock has been kind of tough, but it's hanging in here. Maybe it can kind of move up to 173. If it can get past 173, 77, I see 178 possibly in its future. And SMTC is one I wanted to look at too. I also want to look at Tesla real quick too, Dennis. I don't know if you've been watching that one, but SMTC had a real nice breakout here. And then it checked back yesterday. So this is a good one, like from a trading perspective to watch because it fills. So if you feel like you missed this move up out of this range, you got a nice check back yesterday. I don't know what the stock's doing here pre-market, but I was looking at this
substantially pre-market. I don't know if there's news on it, but it's up 3.7%. So it's a big move here. UBS starts it at a buy.
There you go. So that dip worked yesterday. Tesla had a very nice move. Today's Friday, so that was Wednesday. And then yesterday, an inside day, which just means it's kind of consolidating some of those gains. I'm watching Tesla today. I'm also long Tesla. So We'll see how that goes.
You're joining my party here for a little bit there.
I get in and out of Tesla frequently, yes.
One thing for Tesla is I'm probably going to be long extra into the weekend, depending on what it does today, obviously. But the inauguration coming, obviously, on Monday. You get excitement about the new administration. So think about Trump stocks for Tuesday. I'm probably going to be long some Trump stocks into the weekend here. So obviously, we know energy, but, Tesla's just, an obvious one too. So I'll probably be long some extra. My luck, it'll get downgraded or something, and then I'll get nailed. But we got a super sticker.
Look at that. Will you read it off for us, Dennis, or did you want to finish?
Best place to learn trading. One question: what is the best source for getting post and pre-market breaking news? For example, Dennis makes a great point for entry and exit. Where do you get your breaking news? I mean, there's all kinds of news sources, that you can use here. I have multiple news sources. I know Christian's got Bloomberg. There's, Fly is fantastic for the bang for the buck. Obviously, a lot of our users have used Benzinga because we were with them for so many years. I mean, they all get, similar stuff, but I subscribe to multiples because sometimes they get them at different times. So, it's not always like the same news service breaks the news at the exact same time. Sometimes Reuters is breaking, sometimes Bloomberg is breaking, sometimes Dow Jones might break something with Wall Street Journal. So, I mean, having all those news sources, I subscribe to as many as I can because I feel like if I get one trade from it, it's going to be worth it. But I mean, obviously, if you're just an investor, you don't have to subscribe to them all. You can come here. We try to give you the news as well. We try to sum it up for you.
Well, I mean, both of you guys, Christian and Dennis, you guys both do a great job with the news. I would tune into these guys' Twitter accounts or X accounts for some good info flow for sure.
I was just going to mention one other stock too, because Dennis brought up a good point about possible Trump trade going into the inauguration. Bitcoin has been rallying a little bit, and some of the stocks too. I saw a call buyer yesterday in Riot blockchain. I believe it was, if I'm wrong about yesterday, but Riot's moving a little bit on this too. But you got a lot of the stocks that MSTR, I think, is at a pivotal point, because there's a lot of these tech stocks that have been making lower highs. One of the things that I'm really curious about is to see if we can get out of the pattern of lower highs. Look no other than MSTR, which since it made this peak, lower high, lower high, lower high, lower high. Can it today get out of this little pattern? It is above the 50-day moving average, and I'm looking at the 1-hour chart. Make sure it can get above this 376 level, and maybe you get a little bit of a change in character in MSTR. Anything else, guys, or should we end it?
Imbalances are very mixed here, mostly to the sell side here now, which is interesting, but the market is not buying it. They think they're going to flip back to buys, and they very well might. But we are seeing some sell imbalances, especially in the staples, and a lot of your staples are actually trading down. They often move opposite to SPY. Just keep that in mind, because they're risk off, and obviously it's a risk on morning here. Some sell imbalances here. I think we're going to get some volatility. Sometimes you get some wild pivots, wild action here. I'd expect more chop. So just because we're up, 50 points here this morning, everything's looking fantastic. I probably am fading again. I'm going to stick with the fade trade. I'm probably fading into this a little bit.
I like it too, and I think CC brought up a great point about what the market dynamics are going on here too. That once these the market makers catch up a little bit with hedging around the open, then you might see a little bit of a comeback in with price, and that could kind of dictate the day.
Just a quick reminder here, the U.S. stock market is closed on Monday for the celebrating MLK Day in the U.S., so we won't see you until Tuesday, folks. But thanks for tuning in this week. It was a pleasure being here. Joel will be back next week on Tuesday. Good luck out there, everyone. Have a great weekend.
Great job, Brent.